On today's show, 3 questions. Number 1, was the all-time high a surprise? Number 2, how is oil affecting China? And number 3, what is the limit of advice?
Consult an advisor or conduct your own due diligence when making financial decisions. General principles discussed during this program do not constitute personal advice. This program is furnished by Dentist Advisors, a registered investment advisor.
Welcome to Dennis Money's 2 cents, where we have Dennis navigate all the noise. I'm Matt.
And I'm Rabih.
Yeah, you are, Rabih. It's good to be
Yeah.
back.
Welcome back. How was your
Yeah.
spring break?
Spring break was amazing. So I went to San Diego. My family had an amazing time. Highlight was definitely the zoo. I have to highlight that my son and daughter's favorite animal was the snow leopard. Very, very cool.
That's
It's
cool.
awesome. And then came back from San Diego, immediately got back on a plane again the next day to go to LA for an event for the weekend. So I was in California the whole week. I was exhausted, but it was awesome. It was a good week. So good to be back with you, though.
That is good. So you came back and you brought the snowstorm with you.
Oh my gosh. Yes. Holy cow. Yesterday was dumping snow in Utah. Somehow in Utah, we skipped winter. And then we had a fake summer in March for about a week and a half.
It reached
Like
90.
degrees in
Yep.
March. It was crazy. And then it's now winter in April. I don't know what's happening. We're living in the twilight zone here in Utah. Anyway, let's jump in, Rabih. What the heck is going on with the market? This is the other thing. I leave for a week. Prior to this, we were talking about how the market was, we were confused about what was happening, or not confused. We were saying we were feeling like things were falling in line. It made sense that things were negative. I was a little maybe confused or surprised that it wasn't more. I come back to all-time highs. What's happening here?
Dude, I've been trying to explain it for the last week. And it hasn't been easy to put your finger on the pulse because just to explain, take a step back and tell you what has been happening. Since October till now, nothing on the macroeconomic level has changed. Unemployment has been stable around the 4.3, 4.4%, and it's not budging because we are not hiring, and we're not firing people, but we're also not creating new jobs. So there's a static of doing nothingness in the labor market. In terms of inflation, well, it was trending in the 2.6, 2.7 range, but the last reading came in at 3.3 simply because of the shock that's happening from the war. And we thought, okay, a tick higher towards inflation would probably mean that stocks would be down, not crash and get destroyed, but be down, which is in line with what we were seeing. And then we look at interest rates. Well, interest rates have been, I'll talk about the 10-year. They've been hovering between the 4% on the lower end and 4.35 on the higher end, which affects mortgages. We saw mortgages go up a little bit at the end. And currencies are tight. They are moving within their ranges and how they compare to other currencies. GDP growth is as strong as it usually has. It's been trending around the 2% level. The only difference is probably now consumer confidence has dipped below the average, and now consumers are a little bit more pessimistic. So none of that tells you there should be a move in the market to start with. Then we had the shock with the oil prices, and usually a higher oil prices squeezes the pockets of Americans more. And we said, okay, probably a 5 to 10% drop in stocks is a fair range to look at. And then the market started rallying up, and it is one of the fastest recoveries in the last 10 years, by the way. The Nasdaq has posted 11 or 12 days of up days. It goes up every single day, and that streak hasn't happened since 2019. We are seeing a lot of momentum that we haven't been used to in the last couple of years. And I have to be honest with you, Matt, I was really struggling to find an explanation for it. But this is what markets are all about. I'm so glad we're not concentrated and you have exposure in a globally diversified portfolio. For no matter where the market goes, you have a piece of the new share that's showing up. And yeah, the markets are going up, and I'm trying my best to explain it, but there might be, but what do you think?
We'd rather have this unexplainable rally than maybe unexplainable the other way of a major downturn. It just feels confusing this year. I think Jake alluded to this a couple weeks ago. It just feels more confusing than, for whatever reason, and it's just vibes. The whole idea nowadays with the kids, it's just vibes. It just feels like last year in 2025, we've talked about this before, but when we made our predictions in April of last year, the vibes were just, it seemed so clear that what was happening was just a blip because of what was happening with tariffs. It was like the epitome of noise. And then we were like, nah, this doesn't feel right. It's going to like, this is going to be a good year. And it was. This year, I literally have no idea. It makes no sense. But I think there's a lesson in this, to your point, and we'd rather be taught this lesson on a rally, like I said. But good luck guessing any of this stuff. Like, how can anyone see what's happening in 2026, over the last 4 months, and think that they can time the market or do any of this stuff like consistently? It's a masterclass of proving that no one can outguess this thing.
No one can outguess it. And probably you wouldn't want to react. Like, just when it crashes, you don't want to overreact and panic. And you also do not want to overreact and feel very greedy right now. You have to, take the emotions out of investing in a sense. And when markets go down, the best thing you could do is rebalance your portfolio to make sure you are appropriately positioned with the right risks. So if it starts rebounding, you're in a good position. And when markets rally beyond, what you would have expected it, also the best thing you could do is rebalance your portfolio to make sure that you are staying diversified and you're not getting over concentrated. It covered the gap. Like, the whole dip from the beginning of the Iran war until now has kind of disappeared. And then we're like 2% above all-time high after, Thursdays and Fridays rallies in the market.
So then, are we going to solve this war? It's going to be done, and then all of a sudden they're going to have a drop? Like, who freaking knows? Because you would think that all of a sudden we'd found some resolution in Iran, and then it would really charge this year. But who knows? We could solve the war, and then all of a sudden it drops.
It could be. Right now, it's a bunch of negotiations. Like, I try to look at this from the political lens, and it doesn't make sense because there's lots of bluffing happening. So I'm trying to look at it purely economically and see whether, okay, did really higher oil prices mean that consumers are going to be squeezed out in the US and it's going to lower their consumption? And does it really mean that high oil prices are going to really hurt the rest of the world because people can't consume much, because they're blocked and they can't export much and make money? And if you look at it, it seems like the US consumer is still doing fine. Like, it is a bigger amount at the gas pipe, but we're moving from a very, very low number to like a 4%, $4 per gallon, which is, it's not like we went up to the 6s and the 7s where, that is beyond our expectations. We started at a low point and we came back to the average in terms of how much we pay for gas as consumers. And we were able to stomach it, and it seems like the market just took that for granted, that Americans are going to be stomaching it. Same as in Europe. So the other side of the equation would be, okay, the consumer can still buy, can the suppliers still supply? And with the whole Strait of Hormuz thing, we had a blockade, and then a reverse Uno card blockade on the blockade, and then so what is happening? And I actually went in and dug in some data. Honestly, after 2 days of just researching, this is my best argument for why markets kept going up, and it could be completely wrong. But the idea was, as of Friday morning, Iran announced that they're now opening the Strait of Hormuz. The data I'm talking about right now, they face a switch and change. But up until this point where there are no tankers are moving and oil prices are elevated and there's a block on the strait, it was very interesting to look at these oil exporting countries, see how many barrels they used to export before the blockade, how many barrels they export now after the blockade. That is the quantity. And then look at what the price of oil was before the blockade, what the price of oil is after the blockade, and see, hey, let me look at the top line at the revenue. Could it be the situation where, yes, there's a drop in the quantity because there's a blockade, but it is completely offset by an increase in the prices? And I went in and I got the data for every single country. And
you did. Of course you did.
And honestly,
this is why you're Cash GPT.
It is, and I use actually AI to help me go through and go through all the news press releases to figure out where we're sitting with the data. And I think you would be very interested in seeing how much revenue over this month these countries that export oil and gas have done. Just the assumption is that we started with a price for the barrel of oil at $60, and we went up to an average of 95 because it fluctuated between like a 90 and 120, but most of the days it was 898, etc. So an average of 95. And then let's start with Iran. Iran started with a volume of like 1.5 million barrels a day. And then the blockade happened and suddenly no one can export. So Iran was like, yep, I'm going to make an advantage out of this situation and I'm going to export more oil at higher prices. So they amped it up from 1.5 to 1.6 until the US decided to add a blockade on their ports. And this is the one that's still in order. So their quantity increased by 7%, how much they export. And then oil prices going from 60 to 90, that is a 58% in price of oil. Their old revenue was expected to be like 90 million barrels. Now it's like 152 million barrels per $90 million per day. Now it's $152 million per day. So now they're making 70% more money from the blockade. This is Iran. But Iran is not the only one who
They're
exports
like, thank you for
oil.
that.
Iran is not the only one who exports oil. There's the Gulf countries, which is the elephant in the room. So if we start with the big fish, Saudi Arabia, they used to export 7 million barrels. And with the blockades, all of that on the Strait of Hormuz, that dropped to 5.5 million barrels a day. So that's a 21% drop in quantity. But again, we said prices increased by 58. So Saudi Arabia, even with all that's happening, it used to generate 420 million a day in revenue from oil business. Now they generate 523 million dollars a day. So they increased their revenue by 24%. Similar story with UAE. They dropped in their quantity, increased in their price, and now they used to make $180 million a day from oil. Now they do 209, so increase in 16%. Same with Oman, 26% in their revenue. But the ones who got hit were actually Iraq, which has seen a 60% drop in their revenue, Kuwait, that has also seen a 60% drop in its revenue, and Qatar, that has seen a 19% drop in the revenue. And the reason there's a split between these Gulf countries on how they export is who has access to export their oil and their exports throughout different means, whether it is through like try to bypass it or doing it through pipes and land, etc.
Who can adapt? Who has the infrastructure to adapt?
Who has to adapt? Who has the infrastructure? And it seems like Oman, because Oman gets access. Oman is literally on the Strait of Hormuz, where they can just go east instead of having to go through the strait. Saudi Arabia has pipelines that cross their countries from the Gulf Sea, where the oil is, all the way to the Red Sea. They could do that. Abu Dhabi can connect to these pipes, or the UAE can connect to these pipes. Qatar and Kuwait don't actually, and they are stuck. Their only way out, and Iraq, their only way out is to get their out through the Strait of Hormuz, and those are the ones who got hit. So I'm thinking the main allies of this global economy, the countries that support most of the oil, are actually now making more money. So if we are sitting in, excluding Iran is a different story, but excluding the whole idea of none of our economic variables has changed. The only new thing that happened is that we have oil prices, but that oil price did not translate to a hit on pockets, but translated to more revenue
more
otherwhere
money
in the world where the money circulates globally. This should not be a bad thing on pen and paper. This is my only explanation for why the stock market would go beyond just a recovery to breaking all-time highs, to thinking that there's an expansion in the global economy. So it is interesting to see that, oil, a war and a blockade didn't really mean anything bad to the countries in that region in terms of the economy. Obviously, politically, now you've got two camps of Arab countries, ones that benefited, ones that don't. I don't know how that translates politically in the future. Iran's ports are now blocked, and the rest of the world are totally fine with it because the rest of the world is still making money. I don't know what that will mean politically, but economically, it does not seem that all what's happening had an impact, and American companies are just pricing in the business as usual behavior. and welcome to the stock market.
Yeah, seriously. I'm more shocked when you go through that of just the insane amount of money that we're talking about. You're saying that those revenues on a daily basis, a daily 100 million to 400 million, depending on the country, per day.
Per day. But you have to take into consideration something, that these countries, this is their main source
This is
of
it.
revenue, right?
Yeah.
All the Gulf countries, they do not have income tax.
Yeah.
Right? In the US, your main source of revenue is income tax and payroll tax, and then maybe some from trade. Whereas oil exporting countries, their
They
main
don't
thing,
really need to.
yep,
Yeah.
it's a blessing and a curse, right? But this is their main source of revenues. When you look at $400 million per day, but that's the only thing that's supporting the economy, well, yeah, maybe it's not that large, because the economies are in the sizes of billions. So
Yeah.
that's how I would put it in perspective.
That's a good reference point. And to your point, it's a blessing and a curse. The curse piece of it being it's a single point of failure. That's a massive risk that these countries run of one source of revenue that's, like you said, everything. It's everything. Yeah, it's interesting. But that's what I took away when you were going through that. I'm like, are we serious? We're talking about hundreds of millions of dollars a day? That's wild. So that's the best explanation we have of what's happening with the all-time highs. I trust you with all of this, so I'm like, it's got to be it.
Dude, I do not know. But if we want to connect the dots and like really it is absurd, and we're trying to assign meaning to it. It's a very existential relationship with the stock market. But regardless of what is happening, is that this morning, due to like negotiations, and they're now on the negotiation table. You do this for us, we do that for you, blah blah blah. And this morning, Iran said, this morning, I mean Friday morning, Iran said that they're going to open the Strait of Hormuz, but the US is keeping its blockade on the Iranian ports themselves. And the market absolutely loved it, to an extent where the Dow just bumped up 1,000 points in a day.
Yeah, 2 points or something. Yeah, 2%.
Yep, we're so close back to that $50,000 level that was hit earlier in the year. S&P 500 already surpassed its all-time high, and now we're talking in a range of 7,000, 7,100 or 7,200 almost. The Nasdaq, it's an all-time high.
So Rabih, could this be something as simple as this being, like we talked about this a couple weeks ago, that the market, like the fact that it wasn't down as much as we thought it could have been, we thought could have been a sign of the market doesn't necessarily believe this is going to be a long-standing conflict. And then maybe is this just more of a sign of that the market is pricing in like we're going to be beyond this like really soon?
I would think so, because the markets always look ahead. And interestingly enough, like the US and Iran did not go to negotiate. They went to negotiation like around April 2nd, April 1st type of deal. And they announced like a 2-week truce. And even before that 2-week truce that expires Tuesday as we speak, stock market was starting to recover. So the stock market started rebounding 2 or 3 days before the negotiation/truce happened. The stock market started rebounding at the same time while the president was still tweeting that he's gonna destroy a whole civilization. Like, remember that famous tweet? So, do the markets know ahead of time? It could be. It's the wisdom of the crowd. You can't really out-predict it. It could also be that the market was just covering its shorts, and that was a normal market behavior, and it picked up the momentum. We have no idea. But the markets look ahead, and it seems like they are looking ahead beyond this. It seems like the deal is going to be on the table. We'll see. But from March 30th, which I would think was the bottom till now, here's how the stock market has reacted, actually. Gold is up 8%. International developed markets, including the US, are up 10%. In the US, the Dow Jones is up around 9.8. The S&P 500 is up 12. The total US market is up like 12.7. Emerging markets, including China, which we're going to talk about in a second, are up 16%. Nasdaq is up 16%, and obviously the jack of all, irrationality, Bitcoin is up 18%. So, so this is a very big rally. You're talking about a 12% move in a week. Will it lose steam? Probably. It's running above, the normal pace. You can't keep a full throttle on the car where your miles per RPG is going at 5 for the whole time. It has to go back down a little bit at some point. But we'll see where that takes us. But the market is looking forward. There has been changes. I don't know, this might be too far-fetched into the hypotheses, but there are the way the war in the Middle East is panning out politically, it seems like it's laying a foundation for new economic deals happening in that area, especially between Israel and the Arab countries, and a bigger piece related to the Abraham Accords. Are the markets pricing that in?
Yeah. Well, more to come. I'm sure next time we talk, next week and beyond, we'll have maybe
Hopefully
more.
we'll have clarity ourselves,
Yeah, more confusion or hopefully some clarity. So you mentioned China. Let's move on to that. How is oil affecting China? Because you were talking about all the Gulf countries and it increasing revenue for many of them. What is it doing with China?
Yes, this stems from the narrative, and I think this is more not entertaining. Like, if you're interested in world politics, if you're interested in strategy, this aligns more with that hypothesis. We're trying to see which hypotheses in the world dominate each other. There are so many hypotheses that we fall prey to. The first hypothesis would be, BRICS countries, and they're going to get rid of the US dollar. Remember that whole
Oh, yeah, for a long
thing.
time, yeah.
And we have that, and it's just one of these narratives that we never see it completely translate into the prices, the impact on economy, the stock market movement. But it is it's a big cloud that's always there, and we always point at it. Another cloud would be, the US debt. That is a cloud that we talk about, but it doesn't show up in interest rates right now. There's a third cloud related to world order and who's winning between the US and China. And since this new Trump administration, there has been more, talk about this overall theme other than vis-a-vis the others. We started the year by the US doing a regime change in Venezuela and trying to reroute the oil that was sanctioned to be under the international umbrella of the US that governs the petrodollar system in the world, right? And then they moved to Iran, and it seemed like people picked up on a pattern that, hey, the reason the China is very competitive against the US is that China is able to bypass the petrodollar order imposed by the West and led by the US, where they determine what the price of oil is. They sanction oil exporting countries that do not fit their narrative, and they try to hurt the economy as such. China has been abusing it. China buys its oil from Russia and Iran and Venezuela. And then, the rest of the world, they do interact with the international markets, but they can go and tap into these sanctioned markets, and China does not care. So the whole narrative has been, well, the US is on a quest to get rid of this shadow economy, the shadow economy related to oil. They want to make sure that oil can only be sold when it is living in this US system of supply chains related to oil. Venezuela is done, now is Iran. And they're thinking that by blocking Iran and not allowing oil to flow out of Iran, they have blocked 2 out of the 3 main sanctioned channels that China uses to fund its oil. And by doing this, it's really going to hurt the Chinese economy and puts the US at an advantage.
So it's Venezuela, Iran, and then what's the third for
Russia.
China?
And Russia is the biggest exporter of oil to China. But as we've seen now in this conflict, is that the Trump administration actually removed some sanctions of China, of Russia, to allow it to export oil to Europe, which complicates the Ukraine war. But it looks like we're on a chessboard. This is how it feels like.
Yeah.
And I really wanted to walk the talk and see, okay, how much does China spend on Iranian oil? And how, if the US really flips the table or control on its head and does what it does to the Iranian oil, what it does to the Venezuelan oil, how much impact will that have on China? So I collected some data, again, more to explain how does China collect its oil energy? How does China collect its energy? And out of the ones that come from oil, how much do they depend on Iran? And we're going to see whether that is something that's marginal for them or something that breaks the camel's back. And here's what I have, just to compare them really quickly. In terms of the energy mix, for example, here in the US, the US mainly needs, like out of all the energy it produces, 38% comes from oil, like from crude oil, from gas. And that's why, it's a bad reputation, but it seems like if you have oil, be careful, the US might invade, right? But the oil is a very big source of energy that comes into the US. And it's 38% of the energy of the US comes from oil, followed by 36% comes from gas. So natural gases also fuel the US economy, followed by 8% by coal, which, as you can see, like coal is not really a big percentage for us in the US. And then there is a little bit of nuclear energy in here and there, and a little bit of renewable energy for the US. On the contrary, the way China consumes its energy is completely different. For China, 62% of its energy comes from coal, and that is why there has been a political momentum or agenda to push for cleaner energy. Because just like you can close all the oil imports and hurt China, you can say we need the rest of the world to go green and hurt China. Like they all connect, right? So 62% of all the energy that China gets is from coal. Just stopping here, we would know that, okay, no matter what happens to oil prices, China is really kind of immune because 62% comes from coal, and they have their coal in their own country, followed by 20% coming from oil. And then they have around 10 or 12% related to renewable energy. Like China, in terms of the race to renewable energy, is way far ahead from the US. All their cars are electric. They have a lot of wind turbines, a lot of solar panels. So
which is interesting. They've got both of those. They've got a bunch of production from coal, but then they're way ahead of the game on renewable energy.
Yeah, because I don't think the reasoning is we want to save the planet. The reasoning is we want to diversify our energy sources in this.
Not rely on one source.
Yeah, and 9% on gas. So if you see, 20% of the energy comes from oil, and this is the elephant in the room. So if the US is actually aiming to block all these channels of the oil, they're only affecting 20% of the energy consumption in that country. They are not really throwing China off a cliff. It's not, a trump card. It's just a tactic. So this puts it in its place, in a sense, and explains why probably we did not see a big retaliation from China regarding Venezuela or the things that are happening in Iran.
That's fine. We'll adapt.
They were totally okay with it. For these 20% that are oil, 20% of their consumption of oil, 30% is domestically produced. 70% of this 20% of oil need is imported. And where is it imported from? Well, of these 70%, 20% is imported from Russia, 14% is imported from Saudi Arabia, and then 11% is imported from Iran. So when it comes to Iran, for you to run your country, 20% of your energy comes from oil. Out of this 20%, 70% you import, and out of that 70%, only 10% of it is from Iran. So let's put stuff in perspective. Does really Iran care whether the Strait of Hormuz matters because the second importer for them is Saudi Arabia. But does China really care if the Iranian ports are blocked or not?
Probably not, based on that waterfall of they don't rely on it too much anyway. And of the percentages imported is not a significant amount coming from Iran. So I would guess probably not. I'm noticing another country here at the bottom of the list as well, being Venezuela.
Yes, Venezuela. And it used to be 2%. So if we said Iran is 10% of the 70% that are only 20% of the energy needs, well, Venezuela is 2%. So it's completely negligible. Russia would be a different story. Russia is the main importer for you. But as you can see, it seems like You've got Saudi Arabia, you've got Iraq, you've got Oman, UAE, Brazil, a bunch of countries. But it seems like the Strait of Hormuz is important, but Iran itself isn't. Out of these 70% that are imported gas, 45% to 40% come from the Strait of Hormuz. The rest comes through, boats, and the other bigger portion comes from Russia through pipes. From the perspective of China, China wants the Strait of Hormuz to stay open, but it does not really care whether Iran's ports are open or not. This puts it in perspective, and this really takes away the narrative that all what the US is doing right now is try to block China and hurt China ahead of the expected trip from President Trump to China in May. Will the Strait of Hormuz be on the negotiation table? Yes, but will it necessarily mean that Iran is there? No. And that kind of tells you that it's a very low cause at this point. Like, Iran is alone in the world, unfortunately, and they have to concede, especially nuclear capabilities. And it's just a matter of time. This may be why the markets are going up, because the narrative of China is not really as strong as we thought it would be. And this is more like food for thought and a sense of like, let us see through the clouds, but it's still very foggy out there. You just turned on your fog lights.
Yeah.
We'll see what happens.
The analogies that you bring to the table are my favorite. No, I mean, this is such good insight in breaking down those numbers, because we even said a few weeks ago that the idea, the narrative, to your point, was that this was driven almost solely by hurting China. And then we said trying to hurt Russia as well. But when you break down those numbers, there's got to be another motivation behind it, because it's not hurting China, at least to the degree that would make any sense of doing something this drastic. So I wonder what you said earlier, if this is more of the narrative now, or the reasoning of just bringing it into the negotiation table and reorchestrating some agreements across the board in the Middle East.
100%. So it's going to be just something for the negotiation table. And actually, ChatGPT, the original source, actually said a sentence. So I'm going to quote what ChatGPT said, because it's a really good one-liner. It said, China does not run on Hormuz, but its marginal barrel does. And that's what sets the price. So it's not really about hitting China to bring China a couple of steps back. It's just trying to put roadblocks in front of China so its speed of growth slows down. This is all what oil prices are about right now.
Got it. Yeah, makes sense. Great stuff as always, Rabih. Deep dive, and I love the numbers of breaking this down and showing the different narratives. So again, maybe in a few weeks we'll have a better explanation of what's going on.
Yeah, even
in
if
the market,
even if all what we're analyzing is really noise, at least you've got a good topic for the dinner conversation table.
There you go.
That is the goal
exactly.
at this point.
Yeah. Okay. So shifting gears a little bit to wrap this up, and this is not based on data. This is not based on an article or anything. This is probably a main show topic. We're just going to kind of test in 2 cents. But this is just something that I know you and I have had conversations about that's kind of personal to us. Maybe this is a testament to an existential crisis for me. I don't know. Who knows? But just this concept I've been thinking about quite a bit over the last, who knows? That's just kind of always in the back of my mind of what are the limits of advice? And this is personal to me because I built a career in the advice space for almost 15 years. I completely understand and very much believe in the power of advice, but have also had a lot of things happen personally in my life where I've had to or have chosen to rely on the advice of others. We don't need to go into too much detail, but it's all come back to this idea of me kind of questioning this idea of like, where does the value of advice stop? And where does it just come down to people kind of having to just learn on their own? And I can give some examples of like the role we play, or like the personal stories of like clients or talking to dentists. So I'll give a really quick surface level example. At what point do I just say to dentists, go chase that tax strategy, or that day trading thing or whatever that shiny object is. And I'm truly not saying this from a place of frustration or being like fed up. Not at all. It's literally an exploratory, like I'm kind of going through this in my mind right now of like the value, like how do I speed up the process of acceptance of truth kind of thing, as opposed to me being like, just listen to me, trust me, I'll give you all this data of why this doesn't work, versus just saying like, you know what, you should go do that. Because the only way that you're going to know for yourself one way or the other is if you live this out and kind of see this. I have examples of clients that are now former clients. I will say honestly, and one of the main reason they're no longer clients is because we were kind of reaching this philosophical misalignment of what they thought was worthy investment choices, and I just disagreed. And finally it was just like, this isn't working. Some of those people have since come back around and said, holy cow, I've kind of now understand these lessons. I kind of understand I do understand what you were saying, and I've kind of lived that pain. So I'm going to kick this to you, Robbie, because I know you've got personal side of this as well. But just kind of this idea, and again, this is probably a bigger conversation, but just what are the limits of advice, and what are the things in people's lives? It's just like, you kind of just have to learn this for yourself. What are your thoughts?
Yeah, I'm starting to come to peace with it when I say uh, advice is there to make your life easier. Like whether here at DA or my relationship with my students, where I teach, very spoiled business students, and the whole idea would be is that the job of explaining and giving advice is to make your life easier. You could go do it on your own, but it's not going to be an easy thing just to acquire the knowledge itself. What we're doing Dense Advisors, we are making your life easier. We are providing the education, and then we are providing the infrastructure and the tools and the expertise. And there's information asymmetry when it comes to expertise, right? You can't expect me to go pull a tooth out, just like I don't expect you to know how to trade when the VIX is 40, right? There are different expertise. What we are trying to do is that we are paving the way for you. But we can't really get in your head and tell you, hey, the way is paved, now move these legs and walk. So I feel like the value of advice is it makes your life easier, but advice does not necessarily mean a change of behavior. Advice means opening the gateway. Advice does not mean making you move. And making you move is something in your brain. And I know, like you under here are saying, we're sitting there, we're giving advice for the client. Hey, do not try to day trade this thing. And then we explain why, we explain how returns show up, we explain how volatility clusters, we explain the knowledge, but then from our perspective, we leave the ball in the client's court or side of the field, and it does not get us to a goal. Like there is no behavioral change. Kind of frustrating. It's like you're doing something, and that's why maybe you said it's existential, because it's Sisyphus. We're pulling the rock up the hill and you're not helping us keep it there. It's just rolling back down. And like, there has to be a way where advice goes beyond just providing knowledge and it turns into a behavioral change, or we have to accept that it stops at just giving the knowledge and it's up to the person to do the behavioral change.
Yeah, I think that's a really good point. I think part of this too is personality driven. Like the people who we connect with, who hire us, who we work with, I think a lot of times, and this is the power of our content. I got asked this I did a podcast interview this week, and they asked me about our podcast, and he said, what would you say is the power of your content when it comes to your business? And I think the answer there is kind of what you're highlighting, which is I think it allows us to get our ideas out and our kind of our advice out there in the open public and just general thoughts, and allows the people who believe in what we're saying or have the personality of accepting that advice and knowing what it can do in their life. And it allows us to kind of like find each other. Right. And so I think that's a huge part of this. But speaking of analogies that you always bring, so many amazing ones, I want to throw one at you though. As you were going through it, I just wrote about this on my own little dinky personal blog that I have, like, my family list or reads. But it's really good for me to get these thoughts out, just writing it out. And the analogy that I use that you just kind of alluded to is advice is kind of, so when you think about this in this kind of in the idea of a fire, I can explain to you what a fire is, and I can even define its heat or describe what heat is in like words can do that, advice can do that. But I've come to, I think, realize that at least for certain people, you have to feel the flames yourself and be burned maybe to actually move. I think there's something there. And again, maybe we're getting too philosophical here, but this is just things that are rattling in my head lately for various reasons. And just kind of thinking through this of what are its limits. And again, maybe it's probably not the same for everyone. It's probably, again, very personality driven. But that's what I've been thinking about. You just alluded to it, of just to really move or instill real change. That I think a lot of times there has to be more than just someone told you so.
But I think this takes us away from advice and more towards parenting. Like, parents let you touch the fire, but they are there to make sure that it's only a first-degree burn,
Yeah.
right? So how do you do that as an advisor, right? Where you are
Yeah.
talking to clients and they are so hyped up on that private equity closed fund that obviously is, sketchy. It
Yeah.
did not give you any details. Their assumptions are assuming, a 13% IRR. Like, you're looking at these numbers and I'm like, how do I let them touch the fire, only get a 1-degree burn? Because the cost of a 2 and a 3-degree burn is years and years of extra work where we're trying to help them avoid that.
It's a really good point, Robbie. And I love that you brought that up, because I just talked to a client yesterday and we talked about this concept of what are things that you can put in place to limit the damage, is really what you're saying. Of like, if you, and I just know the certain personalities. And this client I talked to yesterday, I know their personality, and they continue to push me on like, well, I want to go buy these individual stocks, or what about this, or what about this? It's constant. And I try to, again, I'm not sitting here saying like, oh my gosh, you won't listen to me. It's, hey, this is clearly something that there's an itch there that I don't know how else to like solve that or scratch that for you, other than let's build something for you, let's put this into your plan. So for example, I just told them this yesterday. I said, listen, go get on your own, like set up your own account, Robinhood, Fidelity, Schwab, I don't care. Set up your own app, put in $10,000. For them, that's a small piece of their overall net worth, whatever the amount is, but make it something that if you lost that all tomorrow, you'd be perfectly fine. So for them, I was like $10,000, $20,000, you're probably fine. And then go crazy, go have fun, and let that build that kind of need to learn on your own into your overall system. I think that's the best way to approach this that I'm kind of figuring out. And I love that you said this, because it's what are ways that we can understand ourselves, how we approach this, be really realistic about the value of advice in our life, just be really honest about that, and then build systems and a plan around how you approach it, and limit the damage, to your point. So you're not burning your entire body. You're just maybe burning your little pinky.
100%. And I actually see it with some other clients where they meet us and they probably have like a different experience with another financial advisor, where the financial advisor thinks they know how the world runs 100%, and they tell them this is the strategy and it has to be this, and it doesn't align 100%. I am totally fine. I mean, we have clients. I'm totally fine where we take out a 5% sliver out of the portfolio, or 10%, depending really on the client situation, where we say, what is something that you want to add? And we're going to implement it in a very diversified way, in a way that it scratches the itch, but also reduces the potential for it being to be a burn at all. It's just something that is different, that deviates away, because the goal here is not to have you burn the whole portfolio. And if allocating 5% or 10% to something on the side makes you stick with this strategy and make it feel more personal, that you are going to invest for 30 years, then we have achieved our goal.
Yeah.
So we are very flexible. We have a globally diversified portfolio strategy, but we are very flexible because we know that it is more important that you stay invested for 30 years versus missing out on, 0.5% just because you deviated.
Yeah, it's a really good point, and I love that too, because it's, if this little side thing you've set aside, like either you put off here, allows you, like if that's what you need to kind of mentally and emotionally kind of release yourself to focus on, I know right now we're talking in the lens, through the lens of investing specifically. There's other aspects of,
sorry.
No, it's fine. It's good. But if that is what allows you to stick to the long-term plan, if that's what you need, then it is so worth it. Even if you lost all that $50,000 or that $20,000 or that 2% or 5% of your portfolio, if at the end of the day you lost it, but it kept you 95% invested over the next 30 years, that's great. We're having this, you're kind of being my therapist right now, and I really appreciate it. But it's kind of this idea of where do we draw the line, where do we draw the line of saying, no, like we've seen this, we've talked to hundreds, if not thousands of dentists, we've been around the block, listen to us, versus saying like, you know what, I want to let you do this and let's build this system around it. I guess that's what I'm kind of been thinking about lately. And wanted to bring it to this discussion. Hopefully it's insightful for people out there listening. And if you've got comments or you've got things you want to add to this, please, you can email us at podcast@dentistadvisors.com if you've got experience with this. But I appreciate you, Rabih, kind of going through this. The last thing I'll mention on this that I think is important, or that kind of parallels this is kind of why I struggle. I think it kind of fits in the same category. This is why I struggle with like these risk tolerance questionnaires, of why I've always struggled with it, because it pretends like this questionnaire is going to be the end all be all of you predicting how you're going to respond when things get really scary. And it's just literally, a display of recency bias. So if you were to take it when things are like end of 2025, a risk questionnaire, you're going to be super brave. You're going to be like, this is odd. Yeah. Are you kidding me? 100% equity. No problem. Let's go all in on NVIDIA. But if you were to ask the same or do the same questionnaire early 2029 or 2009, you're running for the hills. You want to be in all cash. I think it kind of fits in the same category of kind of having more understanding that you don't know how you're going to act or how you're going to behave. And sometimes you just kind of have to learn as you go.
That is what, differentiates an amateur from a professional investor. Like really, especially those DIY investors. And, I have nothing against them. And I actually like to have conversations with them because they have their own, narrative of how the world is running and their own policy theories. But really what differentiates them isn't the information. A DIY investor, if you search hard enough and you go and learn hard enough, you might have the same amount of knowledge as a professional fund manager. You might know about a certain market, about a certain company, as much as they do. The main difference between them is that you only have a trading account that is designed to keep you to trade, whereas the professional money manager has a system, has processes, has committees, has, a procedure that they have to follow for proper decision making that allows them to fare better off during crises than you do. That's why they survive where you don't.
Love it. I'm going to end it there. Really appreciate this, Rabih, and you letting me kind of use you as a sounding board, and everyone can just listen to my therapy session with you as I go through my existential crisis. I do think this is a good conversation and probably a bigger conversation we should take to the main show and just dedicate some time to just this overall discussion. But again, we'd love to hear from you. Podcast@dentistadvisors.com. Also, if you're out there listening and it's been a long time, we talk to people weekly that will tell us, I've been listening to you guys for years. Finally, it was time to talk to you. If you're one of those people and you're like, I've been thinking about this for a while, it's time, Rabih. I think it's time for them to call us. We would love to talk to you, hear your story, answer any questions you have. Really low pressure, complimentary consultation, and be able to help you with your personal situation. You can go to dentistadvisors.com, click on the book free consultation button. And then, of course, the summit coming up June 11th through the 13th, Midway, Utah. Rabih, you and I were just talking about, you said how you're going to kind of set up your speech at the summit. I am seriously so excited for you to speak. You and I have talked about this back and forth, and the energy you bring, the wisdom you bring, the insight is going to be so impactful. So check it out, dentistmoneysummit.com, June 11th through the 13th. Come hang out with the DA team in Midway, Utah. For now, Rabih, thanks for being here and sharing your wisdom. Everyone, thanks for listening. That was our 2 cents. Till next time, bye-bye.